So we are seeing this sort of bounce in gold. Is that all it is here? Are we just sort of seeing a reflexive move after it has fallen so much?
Yeah, we are seeing a short-term correction. I mean, we at iTrader have been extremely bearish gold since this market broke 1,500. We put price targets at 1154 in the shorter term. But what we're seeing, especially after last Friday, the great data out of non-farm payroll, really pressed gold lower. But what we've been watching and trading this market in the shorter term is you want to see this market close against the lows. And when this market held 1206 and rallied back above 1221, which is a major point that when the resistance at that point we were looking at, that said that we're going to continue higher in the shorter term. We now have a couple points we're eyeing, 1255 and 1268 on a closing basis. We get above 1268, we are going to probably and likely consolidate back above 1300 to resistance at 1323. We're bearish, but we're smart about it, and we're going to watch the volatility in this market. And ahead of earnings that started this week, people are finding value to hedge some risk at 1200. Gold still has some small safe haven value at this level and ahead of the FOMC and Ben Bernanke today.
And we should mention you were watching 1255 and we're right around those levels in gold. In fact, we hit 1255 earlier today. Matt, I want to bring you into this because you actually paint a little bit more of a cautious scenario for the remainder of the year, but you're not looking to gold as a place of safety.
Yeah, I'm not aware that gold pays a dividend, and that's all we focus on. But I think when you look at gold, it's a part, as commodities are, of many people's portfolios. And I think when you look at this, I agree that there's going to be a lot of volatility on almost all asset classes going here. I think it's a great trade, but you have to be very nimble, and I would make this a small part of your portfolio because you could see a lot of swings coming up, whether it be the FOMC meeting, potentially the federal debt negotiations. You're looking at a lot of situations where gold, I think, is going to be very reactionary to news events. And I think, it's going to be a situation where I think there's going to be an outside chance of returns on both sides, but still be within a very narrow band. Our firm, we don't invest in it, but if I do, I'd be very choosy on my option strategies here.
Right, and Bill, you are, as you mentioned, you're longer-term bearish here. There are the reasons that you just heard Matt mentioning, and then there's the outlook by many currencies traders that the dollar's going to continue to strengthen from here, even though it's had a little bit of a short-term pullback, and that likely won't be good for gold either.
Yes, the thing is, the U.S. dollar has risen against the euro and the Japanese yen since when gold was at 1900, 1800, 1700. The Fed is not easing at the rate that they have been before. And in Japan, in Europe, as well as Britain, they're looking at easing at a faster pace than us. We've fallen down the totem pole. So gold priced in dollars is not going to have the same value that it once had. Also, inflation, the Fed has been trying to target a 2% inflation rate. We have not been able to get there. And inflation is not the worry. Deflation is the worry. So we're eyeing $1,000 after the short-term break of a bounce and correction we're seeing in gold right now.
And what kind of timetable are you looking at for that?
I think we could see it by the end of the year. $1,000 definitely in the cards, maybe even sooner. The 1323 is going to be a big level, and we're eyeing that. If this market gets above that 1268 on a closing basis, then we can start seeing a little further correction. But really, this market at any point can start turning down, and we're not really playing it to the long side, but we're hedging ourselves out in the longer-term short positions that we hold here at iTrader.
I'm curious, if you're looking at sort of a long-term bearish position and you want to short gold, I'm curious how you do it.
Well, there's no better way than futures. The Globex, the market has futures 100 ounce in margins roughly around 10,000. And there's no better way to do that. It's a 24-hour market, and that's exactly what iTrader does. ETFs, you don't have access to 24 hours. You don't have option access at 24 hours either. You have to do it with the futures, and there's also a smaller contract of 33 ounces you can use as well. But that's really the best and only way I believe you can do it.
Matt, I'm also curious, if people aren't going to be, if they feel they need some sort of safety or perceived safety, if you will, and they're not going to gold, is there anywhere else you see that they are going or are going to go?
They're going to cash. You're seeing a record amount of assets move out of bond funds. You're finding, Julie, people getting their statements and surprised that they can actually lose money in bonds. And so some people are going into stocks and others are just putting into cash. And I think it's something that when you look at investors right now, especially maybe baby boomers and retail-oriented investors, they've rode the bond rally for so long that it's going to be a shock to them. And
so they're still shocked. Even I mean, if they've been watching us, people have been warning about this stuff for a while.
Quit using logic, but it's one of those things that I think that they've enjoyed it for so long that they're going to move. They're going to stay in until they're forced, and you're seeing a record amount of flows beginning to come out of bonds.